Hello, in this video we have been working on a point to prove and let you know that trading is not actually a scam, and you have an assignment to do. If after you follow the series of this video starting from the market structure, you can now decide either to continue for 3 weeks on your demo account. If you have a live account, suspend it and focus on your demo account for now. If you run this for 3 weeks and you are still making loss, you are not profitable, it means trading is not for you. You need to look for another thing to do so that you don't lose your hard-earned money. So in this video, I will show you point of interest. In the previous video, we've talked about the structure. In this video is point of interest. So what is point of interest? For instance, price will move this way in a downtrend. Price will give us a lower high, lower low, lower high, lower low, lower high, lower low. Now you already know that this is a perfect structural point, right? And you are expecting to sell because now you know that this is a downtrend. So the question is, where do you sell? Will you just jump into the trade, into the market? You just open your chart and you begin to sell? If that's what you are doing, that is gambling. And that is why trading looks to you like a scam. You don't just jump in that way and make a trading decision. If that is the case, then there is a need for you to identify your point of interest. Your point of interest are those zones that you are interested in. You want price to come to that zone in order for you to make your trading decision. This decision is to sell in a downtrend such as this, and if it is in an uptrend, the decision will be a decision to buy in an uptrend such as this. So the question is, what are those points of interest? Number one point of interest is our order block. Okay, so right here now, this structural point is what we refer to as order block. In a downtrend, this zones is what we refer to as what? Order block. So in a downtrend, we call it bearish order block. While in an uptrend, such as in this scenario, we call it bullish order block. So our order block are always found at our structural point. Any other thing outside your structural point is not an order block. Having said that, which means that one of our point of interest is our order block. Another point of interest is a fair value gap. What is a fair value gap? There is a gap that price leaves when there is high demand pressure or supply pressure by the institution, which is the market makers. Once this demand at high, price tend to leave volume. And as far as trading rules is concerned, price is not permitted to leave a volume. So fair value gap will be a different topic for another day, because you will need to be taught how you can identify this because of its technicality. But let's move to two that I'll be considering in this video, or 3 points of interest we'll be considering in this video. First is order block, 2 is breakers block, then the third one is a smart money cube. So let's go to our chart. This is a typical gold chart, and I want to run you through a particular analysis as far as this gold chart is concerned. So what is this analysis I'm talking about? Pay attention to this. We are now determining our trend of the market, right? So let's see if we can get it proper. So now let's go. This is a lower high, this is a lower low, this is a lower high. Then after that, we do not have any other one. The price keep moving. Okay, this did not close below this, so we have obviously our new lower low. So we have what? Lower low, lower high, and then here is our new lower low. Okay, now look at what happened in all of this movement. In all of this movement to this downside, we want to make a sell trade because now we know we are in a downtrend. So what are our point of interest? Number one, remember we said structural point is our order block, and that is our point of interest. But the question remains is which of these candle is the order block when we are talking about this zone, and that is what I want to explain to you now. The last, a bearish order block, is the last bullish candle. You see in this scenario, this is a bullish candle, a bullish candle, a bullish candle. Before we begin to have bearish candle that came all the way to take this low. The last bullish candle, that buy candle that you see before price move down to create a new structural level, is what we refer to as a bearish order block. It is a bullish candle, but we are calling it a bearish order block. The question is why? It was inside of that candle that will have the bearish order trade that have been placed that was able to reverse the price to the downside. And that is that for a downtrend, because what is before us now is a downtrend. So I will now mark my point of interest. So what? This is my bearish order block. I beg your pardon. Now remember, I told us again, I said another point of interest I want to mark out is what? A breakers block. Now remember, this is your structural point, this is your lower low. So this lower low too, there is an order block here. But however, this order block was extended, and what happened? Price break through that order block. So I'm going to mark that order block as a breaker block. So this one now is not another block, but it is a breaker block, because in an ideal situation you are expecting that price come to this zone as a support. Price will resist and go to the upside, but price break through it, so means it has become a breaker block. Okay, because the price break through it, we now call it a breaker block. So now we have 2 point of interest now, which is our order block, right? And then this breakers block. Now what is the third point of interest? Remember I said in this video we'll be looking at 3 points of interest. The third one we want to look at is what? A smart money cube. What is a smart money cube? A smart money cube is an opposite candle that is found in a series of similar candles. For instance, look at what is happening here. This is a bearish candle, another bearish candle, another bearish candle. Suddenly, you have this bullish candle here. So this bullish candle was formed. After the bullish candle, we have bearish candle, bearish candle, bearish candle. Then we have another bullish candle. Can you see that? So, like in this case, this one is not it, because we did not have series of bearish candle before we had that particular formation. So you now see that what are we saying in essence? We are now saying that this is a smart money cube. This is a smart money cube. So what is our expectation as far as trading is concerned? We are now going to mark those smart money cube as our point of interest. We are going to trade it in the direction of the trend. I'm not going to mark this because it's already in confluence with the breakers block. But however, I'm going to mark this. And look at what I'm going to do right away. So I will mark this now, and I will extend it into the future. Do you see that? Now what do you see? First, look at what happened here. Price pull up, but price never entered into that smart money cube. Then price keep pushing down, but look at what happened. Price took days and returned into the smart money cube. And when it returned, you can see what happened. Price sold to the downside. Okay, so this is how you will identify your breakers block, your order block. Now look at in this zone, we are having this particular low. So I want to see if we have a lower low. So let me bring up my horizontal line and see exactly what we are having at the tip of that candle. Yeah. Okay, beautiful. This is a lower low, right? And then here now we are having a new lower high. Okay, so we are expecting this lower high to create a new lower low for us, but it has not. But however, price is in that zone, and then you see that zone is still coincide with our smart money cube. So this is it. So we will be waiting to see if price will give us a bearish signal to sell, and then you can sell from that zone. But in this video, I've successfully shown you how you can identify your breakers block as your point of interest, your order block as a point of interest, and all of that. So let's look at another asset. Let's see. Let's look at crash 1000. Okay, this is crash 1000, and we want to look at recent price scenario. Price 1000 has been bearish, so you can see that from here we had a break of structure, right? We had what? A break of structure. Why do I say so? If you leave me, I'll tell you that this is a higher low, this is a higher high, right? Follow me carefully. Then this is a higher low, this is a higher high, and now this drop and break structure here. So where is our breakers block? Our breakers block is this candle, this bearish candle that refused to hold price back to the upside. So what do? We will mark it. Okay, going to mark the breakers block. Here is the breakers block. Now where is my order block? My order block is this last. Let me zoom out to make this bold and clear. Beautiful. My order block is this last bullish candle. That is my bearish order block. So what will I do? I will mark my order block as well. So in all of this, I am expecting price to come into that zone so I can make my trading decision. So look at what happened. Right here was the break of structure. Price break the structure because here was our higher low. I beg your pardon. Here was our higher low, and this is our higher high, right? So here is a break of structure. Look at what happened. Price pulled back into this other block, give us confirmation, and then it sold down. And again, after it sell, look at what happened. Price, this is other block. This is a breakers block. Now look at what happened here. Price pulled back into the breakers block. We test it again and then move to the downside. Before now giving us what? We have this one now as our lower high, lower low, lower high, lower low, lower high, and so on and so forth. So we'll be stopping here. We have successfully discussed 3 points of interest in this video. What are those points of interest? 1. Order block. 2. Smart money cube. And 3. The breakers block. The most technical one is the fair value gap. We'll be discussing that in the subsequent video. Once we have done that, we'll now be considering liquidity. Then from liquidity, we'll now talk about pullback, and finally entry confirmation. Thank you so much for watching.